Hey guys, welcome back to the channel, or if this is your first time at our channel, welcome to the channel. My name is Travis Sickle. So I want to go through the IRS Form W4 online estimator. It looks like it just got updated. Now I haven't gone through it, so this is going to be a first look that we'll go through together, but let's go ahead and pull it up on the screen and see what they changed and hopefully made it a little bit easier to work with. So here is the Tax Withholding Estimator, and I'll leave a link in the description at the bottom so you can follow along. It is on the IRS's website. And just a point to note that this is a calculator. It doesn't get submitted to the IRS. So if you go through it, make sure that you print out your W4 at the end with the link so you have that information, because it is just a calculator. It doesn't save it. It doesn't submit it. So with that, let's go ahead and go through it. So let's go click on this button, use the Tax Withholding Estimator. And this looks exactly the same right here. So I'm going to say we're married filing jointly. And it's saying, do you or will you or your spouse have a job or a pension that regularly withhold federal income tax from your paycheck? Yes. We have a W-2 job, so we're going to say yes. And let's see what changed right here. We can see that if someone else can claim you as a dependent on someone else's tax return, it's not going to let you fill this out. And then the last one says, I plan to claim dependents on my tax return. Now here is an important note. You will enter information about your dependents on the tax credits page. And that is important because previously it didn't have that information. So if you skipped the credit section, which we'll go through, then it wouldn't calculate it. Oh, let's go back for that for a second. I didn't check that off. I plan to claim, click next. So now it's asking how many jobs or pensions will you or your spouse. You want to fill this out together if you're married filing jointly, because that's really important that you both fill it out together, because this online estimator is going to split up the withholdings for you. So we'll just say that we have one job for this walkthrough just so we can see what it looks like. I'll hit the 2 and you can see that it adds 2 jobs, but I'm only going to put in 1 job. So we'll say, okay, this is different. So we have salary, hourly, a pension, Social Security, none of the above. So we'll say that we are a salary employee, and then it says select what best describes what you or your spouse earned income from this job. Best describes when you or your spouse earn income from this job. All year, we're going to say all year. So from January 1st to December 31st. So if you had this job since last year or previously, choose that for January 1st. And if you expect to have it for the entirety of the year, choose December 31st. How frequently are you or your spouse paid? Weekly, every 2 weeks, twice a month, once a month. So we'll say every 2 weeks. And then using your spouse's most recent pay stub. That's interesting. My first income source, and we only said we had 1 job, but it's using your spouse's most recent pay stub. Interesting. Anyways, we're just going to pick a date so we can see what this walkthrough looks like. Enter wages or salaries per pay period. So let's say per pay period, then we're going to, oh, that's different too. Enter wages or salary per pay period. So let's say we make $2,500 per pay period. Enter wages or salaries year to date. Let's just throw a number. Let's say $30,000. So this is definitely different. You can get this from your pay stub. So this is why they might have made these adjustments, to make it a little bit easier. So you don't have to project how much you've been paid. You just look at your last pay stub and take the gross number. So that's going to be the biggest number that you were paid before the withholdings. That's what you want to do, because it's going to calculate the withholdings for you. So take the gross number. That's the biggest number. Based on the information provided, it looks like you or your spouse's income from this job is $45,000 this year. Is this correct? So I like that. It's doing a little math for us, giving us a projection. Yes, that sounds right. So we'll say yes. Enter the taxes paid per pay period. You can get that on your pay stub. I'm just going to make it up. It could be this number could be way different if you're making the exact same amount. I'm just throwing numbers out there so we can see the walkthrough. Enter taxes paid year to date. Let's say $3,000, whatever. It's going to make the adjustment for us. Any of these pre-tax accounts That's what it's referring to. My spouse or I contribute to a 401k. Now, it's important that this is the traditional. Let's see what it says here, though, if it actually tells you that. It's just saying payroll deductions. So these are our pre-tax accounts. So cash or deferred arrangements, section 401k, 403b plans, but not Roth plans. Why? Because Roths are after tax, and we want the traditional side. So that is the traditional 401k or 403b. I like that they updated that note. I'm just going to exit out there. And these also will reduce your taxable income for HSA, FSA, and cafeteria plans. Are you going to get a bonus? Do you think you're going to get a bonus? My spouse or I got a bonus. None of the above. Let's go ahead and check none of the above. Interesting that it says none of the above. Didn't have that before. Do you or does your spouse have any of the other sources of income? Scholarships or grants, unemployment, self-employment, net income. So if you have a side hustle, you're going to want to check off self-employment, net income. And the difference here is that by not adding self-employment or your side hustle as a job and putting it as self-employment, because you have to pay self-employment tax, and it's going to be calculated a little bit differently. It's 15.3, whereas your employment, your W-2 job, is only half of that. So it's 7.65. So, okay, let's go and check off. I don't have any other sources of income. Let's click next. Adjustments to income. So select any adjustments to income you plan to make when you file your 2021 income taxes, or go to the next step. So let's take a look at these. Student loan interest deductions. Any of these are going to make adjustments to your taxable income. So just go down this list. Let's say we have student loans. You can enter in the amount. Now this is only the interest deduction. So you can enter that amount, and then I suppose it's going to add them up. Let's see. Let's put some numbers in there. Let's put in $2,000. Let's see. Yeah, just adds them up. So I'm going to uncheck that. Go next. Go to deductions. So we're going to take the standard deduction. Now, for most taxpayers, you're going to choose the standard deduction. That reduces your taxable income by this amount. For married filing jointly for 2021, it's $25,100. And we can scroll down, click on next. Tax credits. So here is where we want to choose our child and dependent credits. So child tax credit. Let's see here. And his earned income, adoption. Does it have anything for the advanced? That's what I was looking for. You indicated you have dependents. Enter the ages for each dependent you wish to claim. So enter the age. So now you're going to put in each dependent. So let's say we have a 1-year-old. Let's add another dependent. Let's say we have a 4-year-old. My kids are 1 and 4. And then we have twin 6-year-olds. Let's put those in there too. Let's see what happens. 6 years old. Okay. So dependents and dependent care credit, we're going to skip that. Earned income, limit to 3, foreign, business. You can go through all that other stuff. I'm going to click next. And our income was on the lower side. So it basically is going to give us a full refund. Estimated overpayment of $10,100. Expected tax withholdings of $4,500. Estimated refundable credits, $5,600. For all the kids. Let's go to the other side. And there we go. We don't have to do anything. So we could just go ahead and either leave it as is or just sign it and submit it. But let's go back to our tax credit for a second. I'm just going to get rid of these 3 because then it'll make more of an adjustment. I'm going to go back to the income. Let's increase that to 5,000. So we'll boost our income. You know what? That was, what did we say, every 2 weeks? Let's say 10,000. There we go. Next, go to the results. There we go. And how we can make our adjustment. So this is really what you're looking for. Now, if you see this link at the end, the Form W4, and you click on it, it's going to give you a pre-filled out version. So let's go see. Let's go check it out. So now it's going to check off the married filing jointly, and I don't think it did that last time. I don't think it checked off your filing status, but let's scroll down here, and it might look blank to you at first glance, but there's a 144 here, and that is extra withholdings that we need to make our adjustments or correct adjustments. This is how you should do it. You shouldn't do it any other way. You shouldn't go in, because we have a dependent on there, we shouldn't go and do the multiplication there. Oh, up here. Multiply the number of qualifying children under age 17 by 2,000. So you could see that right there. I made that adjustment. So you should not be doing that to the IRS Form W4 if you're going through the online estimator and it's making that adjustment. It's already doing the math for us. So just fill it out like this. And if you're doing an online software, use this information and that's it. So this is just a quick walkthrough. I wanted to go through the W4. I've done a ton of other videos. I'll go through more scenarios with this updated version probably later this week or maybe early next week. But let me know in the comments down below and I'll do those versions first. So let me know and we'll get it done. So thanks for watching. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.